we are seeing increasing central bank purchases of silver is a phenomenon that I'd never seen before. And I can only speculate as to its cause. If your listeners will replay earlier interviews that you and I did, suggested that the leadership in precious metals markets needs to be established before gold follows suit. If you start seeing momentum in silver, however, silver bull markets are very, very, very emotional. I'm not saying Russian central bank buying, Chinese central bank buying, Indian central bank buying will give silver the momentum that it needs to break out. If demand for gold and silver merely reverts to the 4-decade mean, which is what I think it will do, that implies a fourfold increase in demand. And that would do a very, very interesting thing to price. Away from arithmetic and into narrative, I note that inbound inquiries, which is to say subscribers to Rule Investment Media, are currently running about 50 per day. The majority of those, interestingly, are non-US now, and they are coming from everywhere. A couple of interesting trends. One, and stands to reason, a lot of German interest, because the German government has been even dumber than the American government. And there's a whole generation of young Germans who understand that they were fed a bunch of horsepucky by Merkel and her ilk. I think come to the rightful conclusion that they need to own precious metals. The other thing that's interesting, Donegan, which I've never seen in a market before, is that about a third of my increase, a little less, 30% of my increase, are now coming from young women. It used to be that the gold audience looked like me. Old, fat, bald, white, rich. There is an increasing interest among young women in gold, which, by the way, anecdotally was supported by Costco, as you know. Is now, at least nominally, in the bullion business. And they have reported that a surprising number of the buyers of gold have been younger and a surprising number have been female. So I think that's some anecdotal evidence, not statistical evidence, but rather anecdotal evidence, which would suggest that the market for gold and the awareness of precious metals among retail investors generally is swinging up. It's important to note, too, that as dangerous as U.S. dollar participation is, that old Casey joke about the U.S. dollar being the worst currency in the world except all of the others applies. When we talk about gold breaking out into nominal highs against the U.S. dollar, in other currencies, gold has performed spectacularly well over the last 5 years. And so I think if you're a saver in almost any currency in the world, other than the US dollar, gold has already established momentum. It's already established a trajectory. And if I had to guess why an American database like Rule Investment Media is becoming increasingly non-US, I suggest that the price action in precious metals in those securities has already demonstrated thesis, while in the United States, the thesis is still being questioned.
The rising demand for gold and silver in today's global market is underscored by a diversification in demographics and an increasing global reach. Rick Rule notes a remarkable uptick in inquiries for precious metals, with around 50 inquiries per day at Rule Investment Media. Interestingly, a large portion of these inquiries comes from outside the U.S., reflecting a growing international awareness of the risks inherent in fiat currencies and the stability of precious metals. This shift in demand isn't just limited to traditional investors. A significant portion of new interest is coming from younger individuals, and notably from young women, something unprecedented in previous bull markets for gold and silver. What has led to this diverse interest? Part of the shift can be attributed to the geopolitical and economic landscape. For example, in Germany, a younger generation is coming of age with a healthy dose of skepticism, having seen the economic policies under Angela Merkel's leadership. They've grown up watching issues like inflation, negative interest rates, and economic bailouts, leading them to question traditional investment vehicles. For them, precious metals represent a safer alternative, a hedge against inflation and currency devaluation that doesn't carry the risks associated with fiat currency. This interest from German investors speaks to a broader European trend where concerns about government fiscal responsibility and the euro's stability are driving individuals to secure tangible assets like gold and silver. This trend also extends to the US, albeit at a slower pace. In the States, the narrative around precious metals has often been dominated by older, more established investors who see gold as a means to preserve wealth in turbulent times. But as inflation and economic uncertainty have become more prominent in the media and day-to-day reality, A younger cohort in the U.S. is beginning to see gold and silver as viable long-term investments. Rule notes that even major retail chains like Costco report increased interest in bullion, and a surprising number of these buyers are young and female. This shift not only challenges the stereotype that gold investment is primarily for older, conservative men, but also points to a broader cultural and financial shift. Part of this growing appeal is gold's performance against non-U.S. currencies, where it has shown resilience and substantial gains over the past 5 years. While the U.S. dollar's relative strength has kept gold prices more stable domestically, international investors have witnessed significant increases in the value of gold against their local currencies, which makes it an increasingly attractive asset for those looking to diversify their holdings and protect their purchasing power. Meanwhile, central banks, traditionally conservative in their asset allocations, have also shown heightened interest in precious metals. Their recent moves are particularly noteworthy because they are not only buying gold, which is somewhat expected, but silver as well. This departure from conventional asset allocation among central banks could indicate a long-term vision for silver's role in the global financial system. For example, India and China, two countries with a deep cultural affinity for silver, are leading this trend, which may indicate a strategic shift toward assets that offer both industrial utility and value storage. The drivers behind this trend include not just an awareness of silver's intrinsic value, but also its increasing industrial demand, which is largely driven by renewable energy technologies, especially in the solar panel industry, and the ongoing electrification of global transportation. Silver's unique position as both an industrial and precious metal means it has a dual appeal for investors, who see it as undervalued compared to gold, while also benefiting from growing industrial applications. All these factors point to a broader global shift in the perception of gold and silver as foundational assets in a diversified portfolio. Investors, be they individual, institutional, or governmental, are recognizing that precious metals provide a safeguard against inflation, currency devaluation, and economic volatility. This growing awareness among younger investors, international buyers, and central banks highlights a new era in precious metals investment, where demand is less reactive and more fundamentally tied to economic concerns that transcend borders and demographics.
The increasing central bank purchases of silver, which you've correctly documented, surprised me. It isn't something that I've seen before. And I've been struggling. Well, I haven't been struggling. I've been asking people who are smarter than me what it means. I haven't received a satisfactory answer. Part of it would suggest that foreign central banks are becoming semi-speculative, that they have looked at history and seen that silver has outperformed gold after gold has established a trend. And if they think gold has established a trend, perhaps rather than just defending their economies with gold, they're going to try to make a profit. Historically, the concept of central banks making a profit is a concept that has never occurred before. So I'll leave the efficacy of those strategies to other people. The other theory that I heard is that India in particular, but perhaps India and China too, as a consequence of historic cultural attractiveness to silver, are going to encourage retail savings in their own countries. And so part of me has a trouble believing that, because I think that in India, for sure, silver would crowd out the rupee. In other words, people would go for real money as opposed to government money. Too sweet. And I think that the government might be smart enough to understand that. China might be trying to do the right thing. I don't know. What you suggest, which is to say that we are seeing increasing central bank purchases of silver, is a phenomenon that I've never seen before. And I can only speculate as to its cause. If your listeners will replay earlier interviews that you and I did, suggested that the leadership in precious metals markets needs to be established before gold follows suit. If you start seeing momentum in silver, however, silver bull markets are very, very, very emotional. I'm not saying Russian central bank buying, Chinese central bank buying, Indian central bank buying will give silver the momentum that it needs to break out. What I am saying is that when silver does break out, it's truly an amazing financial circumstance for those speculators who can afford it, and those speculators who have the emotional stability to handle the volatility that you're going to see in the silver market. An allocation to the higher quality silver stocks and silver juniors, a small allocation to be sure, an allocation that you can afford to lose 30% of if you're wrong, and an allocation that you can stomach 15% volatility and for no reason other than it's Monday or Tuesday is something you should consider.
While gold has traditionally been the safe haven asset of choice for governments, recent trends suggest a growing interest among central banks in silver, a rare and unexpected development. Rule notes that he's been questioning and consulting with experts to understand this trend, as it marks a clear departure from historical practices. Historically, central banks have purchased gold as a reserve asset, a hedge against fiat currency depreciation, and a stabilizer in times of economic volatility. Silver, however, has primarily been seen as an industrial metal and not typically part of a central bank's asset strategy. The newfound interest in silver indicates that these banks are likely seeing the precious metal through a different lens, one that considers silver's multifaceted value beyond traditional uses. The silver market's recent activity is influenced by a complex mix of speculative investment, industrial demand, and national strategic interests. Central banks in countries like India, China, and Russia are showing an appetite for silver that goes beyond typical reserve assets, signaling that these nations might be considering silver's potential as a dual-purpose metal with both industrial and monetary appeal. This shift suggests that central banks are becoming more flexible and open to diversified approaches to currency stability, even venturing into speculative territory. One theory behind this shift is that these central banks are capitalizing on the historical pattern in which silver follows gold's lead in a bull market, often outpacing gold's percentage gains once a trend is established. This trend was evident in past bull markets, where silver's value surged dramatically following gold's initial breakout, rewarding those who recognize silver's potential as a lagging but powerful asset in bull runs. This current silver demand, combined with technological advances, is setting silver up for a potential renaissance. Silver's intrinsic properties make it indispensable in green energy technologies and digital applications, positioning it as a metal with both financial and environmental significance. As global economies prioritize renewable energy and green technology, silver is gaining attention for its vital role in photovoltaic, solar cells, and electric vehicle components. The expanding electric vehicle market, which relies heavily on silver for its electronic systems, adds another layer of sustained industrial demand. Governments and investors alike are beginning to understand that silver's dual role as both a precious and an industrial metal could provide substantial returns, particularly in an era focused on sustainable and digital innovation. Central banks' interest in silver could also be a calculated strategy to bolster their economy's domestic savings. India and China, two of the largest consumers of silver for cultural reasons, may be encouraging silver accumulation to provide their citizens with a stable store of value amid global economic uncertainty. While this theory might seem counterintuitive, considering it could divert savings away from local fiat currencies, it aligns with a broader effort to stabilize domestic economies by anchoring citizens' wealth in real assets. Encouraging silver savings could also reduce these countries' exposure to the volatility of global fiat currencies, a significant concern in an era where the US dollar's future as the world's reserve currency is increasingly questioned. This changing landscape points to a more profound shift in global financial behavior. The traditional safe haven appeal of gold is now mirrored in silver, a development that is reshaping the dynamics of the precious metals market. Central banks appear to recognize that in a volatile and interconnected global economy, a broader base of reserve assets can provide greater stability and resilience. This diversification may also represent a strategic distancing from over-reliance on the US dollar, as countries seek to insulate themselves from potential dollar devaluation and the weaponization of US monetary policy. The potential for silver to outperform gold during a bull market is another factor attracting attention. Silver has historically displayed more volatility than gold, which can amplify gains during periods of economic instability or currency devaluation. In previous bull markets, silver has often surged ahead of gold, delivering outsized returns to investors willing to weather the volatility. This behavior is primarily due to silver's smaller market size, which allows for more dramatic price swings as demand shifts. As Rule notes, once silver gains momentum, it can lead to remarkable financial gains, especially for speculators who have the resilience to handle its inherent volatility. The gold-to-silver ratio, which currently sits at historically high levels, suggests that silver could be significantly undervalued relative to gold, providing a compelling case for those looking to diversify their precious metals holdings. If silver's growing appeal catches on with institutional investors and governments, it could lead to a profound revaluation of the metal. The speculative nature of silver means that once demand accelerates, prices can rise rapidly. However, investing in silver is not without risks. The metal's notorious volatility requires investors to have a high tolerance for price fluctuations and to view silver as a long-term investment rather than a quick profit asset. Rule advises a measured approach, particularly for those new to silver investing. Allocating a small portion of one's portfolio to high-quality silver stocks or junior silver miners can provide exposure to potential gains without overexposing one's assets to the metal's inherent volatility. The allure of silver stocks, especially during bull markets, lies in their potential to generate significant returns. Small, well-managed silver mining companies can deliver exponential gains during bull markets, often outperforming the physical metal. However, these stocks are also subject to heightened risk and volatility. Silver mining stocks, particularly junior miners, are speculative by nature and can experience sharp price swings unrelated to broader market movements. For investors who can afford to take on these risks, a small allocation to junior silver stocks could provide a high-reward opportunity in the event of a sustained bull market. However, it is essential to approach these investments with caution, keeping in mind that even in a strong bull market, mining stocks can be unpredictable. Beyond the immediate appeal of financial gain, silver's strategic importance is becoming more evident on a geopolitical level. Countries worldwide are recognizing the need to secure access to critical resources, and silver's role in advanced technologies has made it a priority. As nations invest in renewable energy infrastructure, silver's demand is likely to grow, potentially leading to supply shortages. Given that silver is often mined as a byproduct of other metals, the silver market is vulnerable to supply constraints if demand outpaces production. This supply-demand imbalance could drive prices higher, adding another layer of appeal to silver as a long-term investment. This increased demand for silver is occurring at a time when traditional currency systems face unprecedented challenges. With global debt levels at record highs and central banks resorting to unconventional monetary policies, fiat currencies are under pressure. Investors are increasingly aware that inflation erodes the purchasing power of fiat currency over time, making tangible assets like precious metals more attractive. The recent interest rate cuts by the U.S. Federal Reserve, despite inflationary concerns, have raised questions about the stability of the dollar and other fiat currencies. These cuts signal a shift toward looser monetary policies, which could devalue currencies and increase demand for gold and silver as hedges against inflation. For American investors, the current moment presents a unique opportunity to diversify their portfolios with precious metals. The U.S. dollar's recent strength has made domestic gold prices more stable, but this stability may not last as global demand increases and central banks shift away from dollar-denominated assets. With inflationary pressures building and economic uncertainty on the rise, the case for precious metals as a long-term hedge is stronger than ever. Investors looking to protect their wealth from currency devaluation and economic volatility would be wise to consider silver alongside gold, as both metals offer unique benefits in an unpredictable economic landscape. In conclusion, the growing interest in silver by central banks, individual investors, and industrial consumers is reshaping the precious metals market. The unique combination of silver's monetary and industrial value positions it as a compelling investment in a time of economic uncertainty. As more investors recognize silver's potential, the metal could experience substantial price growth, benefiting those who have positioned themselves early. For those considering silver as part of their investment strategy, now may be the opportune moment to capitalize on the metal's undervaluation and potential for long-term gains.